Hello, it's Dr. Dami Kabiawu, and today I'm going to be walking you through creating ratios for performance measures for different companies. Now, this is a supplemental video to my performance evaluation lecture in corporate finance. So a lot of the knowledge is a lot of the knowledge here for what ratios are and formulas for different kinds of ratios is assumed. On my screen, I have the financial statements for Home Depot. I have their income statement and balance sheet, and I'm going to create some ratios from the income statement and balance sheet. And then to cap up the tutorial, I am going to show you a template that I created before and how that template can be used for ratio analysis. I'm going to start with the simple things here. I'm going to take this financial statement for Home Depot and I'm going to format it. So we have cash, receivables, merchandise, other current assets, total current assets. That's a subtotal. I'm going to put a line above it and a line below it. To format in Excel, there is the drop down button at the top here. This is the border formatting. You click on the drop down and select the kind of format you want. I want a single line at the top and a double line at the bottom. It's just how I delineate subtotals. And total current asset is a subtotal and it's used for several ratios that we're going to be calculating. So hit that and it's formatted. I'm going to scroll down. We have asset, total assets. I'm going to make this bold. And yeah, I'm going to put the double line on it too. So if I'm looking for total asset, I know exactly where it is. Dates, this is 2021. I'm going to fill it with yellow just so it jumps out at me and make the dates bold as well. Now at the bottom, I'm looking for total current liabilities, so I can format that the same way, put a line at the top and at the bottom. And I'm scrolling down, I'm looking for total liabilities. I'm going to put a line above and below that. I'm going to make it bold as well. And we scroll down until we find total shareholders equity. I think it's right here. I'm going to make that bold, same formatting as I've used for the totals at the top. And then total liability in shareholders equity, I'm going to give that a background, make it bold, put two lines below it. That gets rid of the line at the top. By the way, the double line that was below shareholders equity is gone now. And I'm going to delete everything else because I don't need them. So that's the financial statement, the balance sheet done. Then in the income statement, format that as well. For income statement, I'm looking for all subtotals, right? So I've got net sales and I've got cost of goods sold. One minus the other gives me the gross profit. So right here is the subtotal. I'm going to scroll down. I've got SG&A impairment, total expenses. That is a subtotal. Total operating income. That's a subtotal as well. I'm going to make that bold because total operating income is revenues minus all operating expenses. Scroll down, you take away, and it's also in this case, it happens to be your earnings before interest and taxes. Because after operating income comes interest income and then earnings before taxes. So we know that earnings before taxes, interest and other interest net, that's a subtotal. It's not available in all financial statements, but in this case, it is a subtotal. And then earnings before interest and taxes. That's a very important, earnings before taxes, very important number. So I'm going to put that in and put put a subtotal line under it. Provisions for income taxes, that is my net income. Done. Make that, give it a background, maybe make it bold. And then I'm going to delete everything else. So I've got all of the information I need for most of the ratios. To calculate the ratios I'm going to be looking at, I only need two things. Balance sheet and income statement. Now I'm going to create a third spreadsheet. So click down here, third spreadsheet. I'm going to move it to the beginning of my workbook. You just click on the sheet name, click on it, and then you see the paper show up and you drag it to the beginning. There you go. The sheet with all of the ratio calculations is the most important in this financial statement, so it goes right there in the beginning. Right click, and we're going to rename it and call this ratios sheet. Okay, so that's prepped. Now let's figure out what ratios we're going to calculate. I'm going to do a few ratios. So here is one of the slides I'm using from a Brealey textbook on fundamentals of corporate finance. And he's got all of the ratios in here. So we could calculate market to book ratio. We could calculate market value added. But I'll start with something that is 100% on the financial statement, and that is the return on asset. Return on asset is after-tax operating income divided by total assets. That's the formula that I'm going to use for return on asset. So let's go back into the worksheet. Let's give I'm going to put calculations up here. So let's give our sheet a name. Let's give our calculation a name. And we'll say it's return on asset. Actually, I'm going to take this and move it somewhere else. Okay, so that is my return on asset, and I'm going to calculate it down here. To calculate return on asset, like I said, we need after tax operating income. And then we're going to divide that by total assets. Now, I'm going to use average total assets. I'm going to put after-tax operating income in here after I calculate it. I'm going to put average total assets in here after I calculate it. And then my return on asset, aka ROA, the final answer will be in here. I'm just going to put a line in it. I'm going to make it bold to showcase that that is where the calculation is going to stay. So after-tax operating income, that's the first calculation we need. And that takes several steps because the after-tax operating income is the net income plus after-tax interest. In order to calculate interest, I'm going to go into the financial statement. We're going to do interest. I'm going to calculate interest. And interest is found on the income statement. So if we scroll down, we have interest investment income, interest expense, and I'm going to take the net of the two for 2021. So that would be the first one. So that is the interest payment for 2021 right there. And again, you need the formulas to be able to make this work. Let me remind you of the formula for total assets. It's after-tax operating income divided by total assets. Okay? So, wrong one. So let's go step by step. My interest is 1,300. If you notice, I didn't type 1,300. 1,300 already exists in the workbook in the income statement folder. So to prevent yourself from making mistakes, if you're using Excel to calculate formulas, you don't want to type the number. You don't, what I mean is you don't want to go into the ratio spreadsheet here and just type 1300. What you want to do is use equal sign, type equal, go into the spreadsheet where the calculation already exists and select the number. When you click enter, it will automatically show up here. The idea is that you know where the number is coming from. You can trace the number back after the fact. So that is the interest payment. Now we need the tax rate. The tax rate doesn't exist in this document, but the company has provisions for income taxes, and they also have the income before provisions for income taxes. Go back to the income statement. I'm going to put a formula here for tax rate. I'm going to calculate tax rate as the provision for taxes right here divided by the income before the provision for taxes. When I press enter, I have the tax rate in decimals, and I'm going to take that and convert it to percentage. If you click here, you increase the number of decimal places, and that's just convention, right? So I've got the interest rate, the interest amount, I've got the tax rate. Now I can calculate after tax interest. After tax interest is tax interest multiplied by 1 minus the tax rate. So let's say after tax interest, that's equal to the interest amount multiplied by, open bracket, 1 minus the tax rate. Again, notice that all I'm doing is selecting numbers. You type a number in once, and after that, you want to select it. When you do it this way, if you ever make a mistake, you only need to change one thing. And everything else is a formula that depends on that one thing. Everything else will change. So 1 minus the tax rate, press enter. That gives you an interest amount of 185. And I'm going to convert that to money. I'm going to do the same for interest. So now we've got interest, we've got taxes, and this is a calculation. So I'm going to put that in there. That's my way of signifying calculations and subtotal. Totally unnecessary, right? But I want to be able to track which of my calculations is another calculation instead of a link to a number. Okay, so that's our after-tax interest. Now I need the net income. Again, that comes from the income statement. And down here is the net income for the year. So now we have the net income. I'm going to treat that as a dollar amount. And I can calculate after-tax operating income. So my after-tax operating income, I'm just going to move the column out so that I have enough space, is equal to my net income plus my after-tax interest, and that is done. So here is the calculation for after-tax interest. And guess what? Now I can use it to calculate ROA, because my after-tax interest for ROA is just going to click on here. My after-tax operating income will just select the one I've calculated and press enter. There you go. Now, what about average total assets? That's easy, right? I can create a formula here for average total assets if I'm going to use it multiple times and just link to that formula. And that's what I'm going to do. So we'll go with average total assets. Excel has a wonderful formula called average. So I'm going to type equals average, open my bracket, go into the balance sheet. Total assets is on balance sheet. Click on that. And because I've highlighted everything and formatted it, it's easy to find it. So select the two columns, close it. Imagine this, we've got 70,000 and 51,000. The average of that should be about 60 something thousand, right? So when I press enter, I get 60,909, which is a correct answer. Convert that to dollars. Go calculate average total asset is this number over here, and my ROA is equal to my after-tax operating income divided by total assets. Easy. Done. Let's take out some of the decimal points in here. It's just too much to comprehend. That makes sense. Return on asset is 0.23 or 23%. Now, how about we do another ratio calculation? Look at this. Return on capital. For this formula, we need the after-tax operating income, which, guess what? We already have it. After-tax operating income divided by total long-term capital. So it's long-term debt plus equity. I'm going to do a couple more calculations, and then I'm going to leave you to get through the rest of it. So let's do return on capital, and I'm also going to do return on equity. So let's go back to our spreadsheet. This is return on capital. I'm going to make that, I can make it bold. I could give it a background if I wanted to. And I want to. So return on asset is all of these calculations here. So I'm going to select these two columns and I'm going to merge them. Right here, click on that. That merges and centers the data. And now I'm going to give it a nice colorful background, not yellow. How about we do light blue? So that's return on asset. Now let's calculate return on capital. Again, for return on capital, we need after-tax operating income. And instead of me to keep on typing after-tax operating income, I'm going to click on after-tax operating income, and then Control-C allows me to copy it, or you could just click on it, right-click, and select copy, and then go here and paste. I didn't want to type it multiple times. Now, the other beautiful thing we can do here is, because we've already formatted return on asset exactly how we want it, and we want this here, I want the header for all of my calculations to have the same formatting. I don't have to keep trying to figure out what I did. I'm just going to use this paintbrush over here to paint this format on here. To do that, I'm going to select this cell, click on the paint brush, and then select the two columns. See? Done. Now I need average total capital. I'm going to use average long-term debt. And I'm also going to use average equity. The Excel formula for average long-term debt is equal average. We're going to go onto the balance sheet and select long-term debt. I already highlighted it, so it's easy to find. Close the bracket, press enter, and we have long-term debt. And I'm going to do the same thing for equity. Scroll down and select shareholders' equity and press enter. Now we kind of have a very unique situation here that I'm not going to fix. Home Depot had negative shareholders' equity in 1 year and positive shareholders' equity in the new year. And finding the average of that gives you a very, very low value of equity, but that's fine, okay? So I'm going to use the formula as it is. I'm not interpreting, I'm just walking you through how to get this done in Excel. So for average total income, after-tax operating income, we calculated one before. And then for average total capital is the average of long-term debt and long-term equity. Done. See how easy this is. And if you want, you can go back and put dollar signs in front of the monies. Now, sorry, I formatted the wrong thing. So what I'm going to do with this is I'm going to copy this formatting. I'm going to paste it over the two input cells. I'm going to copy this formatting. I'm going to paste it over this cell because that's where my calculation is going to be. And I'm going to put ROC here, return on capital. And that is the return divided by capital. Yay, we're doing good. Now, the last thing I'm going to calculate is return on equity. For return on equity, we need the net income, not the after-tax operating income, right? So return on equity will be calculated as net income divided by average total equity. I'm going to take this format. I'm going to click on the paintbrush. I'm going to paint it. Then I'm going to take this formatting. I'm going to click on the paintbrush. I'm going to paste it. And then I'm going to take the last one. I'm going to click on the paintbrush and paste it. And we will say this is return on equity. And that's going to be equal to, oh, sorry, my bad. Net income, I already have it on the page right here. Click on net income. See? Enter. This is why it's easy to have sub-calculations and inputs on the same sheet and to label them as you're going along. And I'm going to click on average total equity and select this one. Press enter. And my return on equity is net income divided by average total equity. Okay, so those are the three calculations. Everything else on the sheet here is a formula. And you can go in and select all of the formulas here and your work is done. The only calculation that is not on this sheet is your market value of equity, which you can get from Yahoo or Reuters or Bloomberg or any other website like that. Okay, so that is that. Now, what do we want to call these input cells? They're not just inputs. These values here are intermediate steps to calculating the ratios that we want. So I'm going to merge these two sets together and just call it intermediate calculations. I'm going to click on this formatting and put it right on top of this one. So now all my calculations are, it looks good. If you have more formulas to put in, you can scroll down and add them down here, or you can scroll to the side and add them up to the side. The choice is really yours. What I want to show you now is one I did earlier, and I put it on the portal for you so that you can use it to your heart's content. So this is a Home Depot one I did earlier. I have the balance sheet in here, just like you have it, and the income statement. Now, if you are going to use this for your work, you're going to have to copy the two balance sheets and income statement that you have into this workbook. This is the ratio sheet, and this time I've put on the side here a whole empty sheet for all of the interim steps that you need to be able to calculate all of the ratios here. Some of the numbers have been pre-selected. You just need to fill them in. So let's start by deleting all of the old financial statements in here. Click on balance sheet, hold the control key, select Home Depot's income statement and the statement of cash flows. They're old, they're 2019 version, and we're using the 2021 for this exercise here. So I'm going to delete all three worksheets. To do that, I've grouped them by selecting all three of them. I click on the first one, hold down the control key, second and third, right click and delete. Okay. Now, when you delete the old worksheet, you can see that the ratios one isn't affected because there's really nothing in here. You have to fill in these values here in order for the calculations to halfway calculate, and you still need to finish all of the calculations yourself, right? So now we're going to go into the workbook with the balance sheet and the income statement that is the latest one. For this, I'm going to make copies of it. Again, I'm going to click on balance sheet, hold down the control key and click on income statement. That groups both sheets together. Right click and then do move or copy. Create a copy. You click down here for create a copy, and I'm only creating a copy because I've done some work with this workbook. If I suddenly take the sheets and copy it into somewhere else, some of my formulas are going to break, and I don't want to do that. So create a copy and then select your Home Depot workbook. And when you're using this, don't forget to rename this as your company name. It will be your company's ratios, right? Click OK. This is the new worksheet with copies of the balance sheet and income statement. This is the old one, still with copies of the balance sheet and income statement. If you want to deselect one of these, just hold the control again. Oh, sorry. Double click on another worksheet. That will deselect it. So we go back to the ratios workbook. And I'm going to move the ratios, click on ratios and drag it back to the beginning. It's the most important worksheet in here. Now, what do? Go into calculate total assets, average, equal to, balance sheet. Oh, sorry. We're going to delete everything and try this again. So let's say equals average, open bracket, click on balance sheet, select the total assets, close the bracket, enter, done. Now, because I've done some pre-selection for you, as soon as you put the values in, it starts to show up in the template for the calculations. When you see the total assets by itself, you can go in and use the current value of total assets. Net income comes from the income statement. We've done this before, so this should go quickly. Interest expense comes from the income statement, and we'll use that. Tax rate comes from the income statement. It's a provision for taxes divided by taxable income. And I'm going to convert this to a percentage because tax rate is a rate and it should be in percentage terms. After tax operating income, we can then calculate it as net income plus interest times 1 minus the tax rate. This will work because of order of calculations, right? But I am a little bit pedantic, so I'm going to put brackets around it. And it's exactly the same as we got before. Sales is total revenue, so you go into income statement and look for total revenues, and it's somewhere here. Then we can look for inventory. It says inventory at the beginning of the year. The inventory at the beginning of the year is the same as the inventory at the end of the last year. Inventory is the current asset, so we go into balance sheet and look for inventory, merchandise inventories at the beginning of the year. We want the 2020 amount. So done. Cost of goods sold. Back into income statement. And you can fill in the rest of the gaps. So now, if you look in here, we start to see some of the values that we need, right? Down here, we don't have the values here. You'd have to go and get number of shares from the web somewhere. You need price per share, and then number of shares times price per share gives you market value of equity. And it's up here in this calculation here because you only need to use it once. Then you do book value of equity, and then you can calculate market to book ratio. If book value of equity is not in my list on the side here, that would mean that it was used in these calculations only once. So if a number is used once, there's no need to have it in its own input cell. You're only going to use it once. You can put it in the calculations directly because it'll just be the one time. But if it's used more than once, then that's where the benefit or the power of the input side comes in, because you put it up once and you can use it multiple times. After tax operating income shows up here, and it shows up here. Total assets, and I think I'm using average total assets, shows up here and shows up here. I might even show up in other places as well. Net income shows up here. It shows up here. Basically, if I'm using it more than once, it has its own input cell. But if I'm using it only once, then I will just link to it on the spreadsheet. Okay? So, looks good. Here, average long-term debt is only used once. So I'm going to type equals average, open bracket, go into a balance sheet, scroll down and look for long-term debt. Here is my long-term debt. Select both, close it, press enter, and that solves that problem for the one time. Okay? Same with shareholders' equity. If you're only using the average number once, then you go and do the same thing. So now that we have the return on asset, we can just finish the calculations. Equals 1 divided by the other. Okay, and of course, you can then format it to your heart's content. So, wonderful people, that's me done with my little spiel. I would say to you, use the template. Rename the template, delete the existing financial statements, put new versions of the financial statement in, and then fill in the input cells. When you're done, go through the ratios on the side and make sure that everything is filled in. If it's not filled in, go fill it in manually and then do the calculations, and you have all of your ratios done. Okay, if you have any questions, I'm available in class on Tuesday. I will see you then. Have a lovely, well, the day's at an end. Have a lovely whatever is left of the day and weekend. See you on Tuesday.